All right, we're going to introduce the general journal. And the general journal will take the place of T accounts. T accounts are simply used to introduce accounting students to debit and credit. Okay? But the general journal is where we are going to record transactions. So the general journal represents the primary journal of the business, and it represents a transaction diary because transactions are recorded in chronological order, so according to date. Now, the nice thing about the general journal is your transaction is going to be recorded all in the same place. It's not going to be your debit in one account, so you have to look for your one T account, and then you have to look for your credit account. You're going to record the transaction all in one place. Now, the general journal is often called the book of original entry because this is where transactions are recorded first. And as mentioned, the entire transaction is going to be recorded in the same place. Now, the process of recording transactions in the general journal is called journalizing. Okay, so I'll show you an example. So let's suppose the first thing you're going to do is you're going to indicate the year above the date box and then indicate the page number. Now, if you need or you haven't finished recording all your transactions, the next page will be page number 2, page number 3, so on and so forth. So you're going to record your debits your first. Okay, so here's the first transactions is W. Doodley opened up a law practice. So you always record your debit first, and your debit's against the left margin. So cash is debited for $10,000, and your credit is your credits or credit is indented. It's pushed over. Okay, so your credit is W. Doodley Capital credited for $10,000, and then you write a short explanation of the transaction, a couple words long, not very detailed at all, right? So then you skip a line, and let's suppose that you bought office equipment for $3,000 and supplies worth $180 for cash. So your debits are going to be recorded first. So equipment for $3,000 and supplies for $180, and then cash credited for $3,180. So you can just write what happened. Okay, short explanation. Skip a line. Okay, let's suppose we buy an automobile on account. So you have to think first what's going to be debited. So automobile would be debited for $500, and accounts payable would be credited for $500. So now you're not going to see the T accounts. You're going to have to do the transactions in your head, and hopefully you understand debit and credit theory for all the different types of accounts. Okay, so next one on the 12th, we billed a client for services we performed $10,000. So since we just billed him, we haven't received the cash. Okay, we're going to debit accounts receivable for $10,000, and we're going to credit our revenue account, legal fees, let's say, for $10,000. Now, the year and the month must be shown on the first entry of every journal page. So the year and the month. Okay. Now, don't record half a transaction on one page and the other half on another page. Okay, so if it doesn't fit, just skip those lines. And then notice that on a general journal, you don't total anything up. We'll worry about totaling up the accounts when we post, okay, which is coming up in the next video.